What's going on, everyone? We're going to take a look at Coinbase. Today, Coinbase is down almost 10%, 8.79 to be exact. We are down $4.61. I kind of want to talk about where I think the potential could this price actually go. So we're trading at $49.22. Now, last week in the Evolution Traders Discord, I put on everyone's watch list. Let's go ahead and watch coin below a very, very, very specific level. So the level that I was looking at here, if you kind of notice last week's price action going back 1, 2, 3, 4, 5 days, we were building a very, very clear and definitive line in the sand. Now, when I posted it, it was here on the 27th. And if you look at the bottom of this wick here, that price was trading at around $53.50, $53.60. This area, 1, 2, 3, 4 times a lady, as soon as it started to crack below on Friday, did put in a new low, however, started to kind of bounce back up. Now, the whole thought process behind this, if you look at this chart, right, and let me zoom up a little bit. If you look at this chart here, and I'll pull out my drawing tool so we could all see this, this is a classic, example of supply and demand. So look at these last three most recent lows going back to February, March, and now here, right? If you kind of see this triple bottom that we had here, each time we kind of came out down into this area, we had an aggressive bounce followed by consolidation. We had an aggressive bounce followed by consolidation. Now, once we got into this area, we did not see the bounce followed by consolidation, but instead now have broken through, signifying that we could see some more potential downside on coin. Now, again, this could just completely be the first washout here. We'll step in and buy this up, and then we have the aggressive bounce. But one thing that I do kind of want to point out here is if you were watching this stock, you would have been in here somewhere around that $53, down around 3.5, 4 points since the overall direction. That's why staying patient in understanding supply and demand is so critical, right? So a lot of times, sometimes people will ask on some of my YouTube videos, if you guys know me, you guys already know the way I trade, but in the past, I've been making videos for almost 3.5 years now. People used to say, why do you have so much stuff on your charts, right? Oh, it's so confusing. I don't understand it. Now, mind you, when I'm day trading, right? So when I'm day trading, I am not looking at this chart. The chart that I am looking at to day trade is going to be something like this, right? It's very, very clean. It's very, very clean. It allows me to kind of monitor my 5-minute time frame here, right? If we look at the 5-minute time frame, this is a very clear short position through the pre-market lows here. You can see that 52.84, which also is my pivot level, the $52, $53 area from last week. So we got that initial crack, we tried to bounce, however could not hold that. We stayed below the 20-day moving average here on the 5-minute time frame and continued to flush all the way to lows of around 48.45. Now we are trying to bounce in here. This is a perfect rejection spot here. So if I was a scalper, right, I'd be shorting this, and until we close over the 20-period moving average and get a confirmation candle over, right? So what I would like to see, if there was going to be some type of reversal, we need to close over, put in a new high over the 20-period moving average. This becomes our pivot level, and then when we take out that new high, this is where we would get long, and then obviously we would just use this 20-period moving average as our stop, right? So with that kind of all being said, I use the big chart, right? I use the big chart for my pivots. And what I'm going to do on those pivots, for example, the big chart here, what I'm going to do on these on this big chart here is I'm going to start off looking at the daily time frame, right? And then I'm going to kind of cross-reference that with the weekly time frame. Now look at the weekly time frame on coin, right? I want everyone to kind of notice this. Look at last week's lows here, that 52.17. What is going to happen if we start to take this out this week? We've got a lot of potential room to slide all the way down to $33. Now, mind you, just because the next macro area of support is $33, by no means does it mean it's going to 33. Could it? There's a shot in hell, right? Could it bounce anywhere in between? Of course. That's why we have to start off with the macro picture. How much room do we have down to the next demand zone on the weekly? What do we got on the daily? What do we got on the 4-hour? What do we got on the 1 hour? The 30, the 15, the 5, so forth and so forth. It depends on how long you're looking to trade, right? Now, if I'm a scalper, right? If I'm a day trader, I'm a scalper. I'm not going to be looking at the $33 demand zone and telling myself, well, now that I'm short, let me just go ahead and hold this at 33. That's crazy, right? What we want to see is macro levels of demand or supply get broken, and then we want to scalp those on a smaller time frame. So I know underneath these recent lows here, if you go back to February and you go back to March and you look at this past month, you can see 3 areas here that have held. Even if we go back to January and December, right? Look at this area that is held. We have started to crack below this area. So if we do start to build below, 33 could very well be a shot if the bulls do not recover, right? So I just want to keep that at the forefront of everyone's minds. Now, going back to the daily time frame, let's take a look at the daily time frame, and we can see now that this low, if we do close below here, has in fact closed below all of these most recent bounce spots, all of these most recent demand zones, and is actually now entered into a new downward leg channel. Again, $24 being the absolute low, but by no means does it mean it's going to 22. I can see this getting down into the 40s, right? Mid to low 40s. Again, you're going to want to take profits along the way down. If we look at something like the 4-hour time frame, it's going to give you a little bit of a different picture here. You've got the next support, macro support on the 4-hour time frame at around 37. However, if we do go back to March, you can see these recent lows here. That price is sitting at around 51 to around $50 even, right? So we have broken below that. Now, if the bulls do not recover, meaning they do not kind of eat this price action back up and get us back over $55, then we potentially could start to just slowly drift down. If we look at the 1-hour time frame, right? If we look at the 1-hour time frame and we kind of see, again, broken below the bottom linear regression channel here, was holding it for 1, 2, 3 days. 4 days, 5 days. If you see this and you start to understand supply and demand, you understand that, hey, yes, even though this looks like a potentially good bounce spot, when we do finally close below it and confirm it on the next candle, and what I mean by that is this, right? As soon as we break, let me bring my jawline tool back out. As soon as we break below it, which was here on this candle, as soon as this next candle starts to confirm it, we've got to be short. Right? We cannot be adding to our positions long when we've broken below a major area of demand and also started to confirm that price action to the downside. Now you can see here that we do have a hammer candle forming, right? So lows of 48.45. Could we be looking at a bounce? We could very well be looking at a bounce. This is for all short-term traders. If you're just a day trader, a scalper, what we would be looking for tomorrow, let's say, for example, obviously we know it's only 10 o'clock in the morning here, Pacific Standard Time. We've got 11, 12, 1 before the market closes. So we got 3 hours until the market is going to close. If, for example, the market closes now and we do close right here, what I would be looking for tomorrow on a scalp only, it doesn't necessarily mean we're going back up to $55 or $60, nothing like that. This is just a scalp, right? If we do close here and we take out today's price action, we've got room up to $50.62, which is about $1, and then we've got room up here to the next rejection spot, which is 51.50. Those would be the 2 areas that I would be looking to play on coin for a potential dead cat bounce. And then if we do break below the 48.45, again, I would re-enter the short position and kind of just ride it down as long as we're below this 5-day moving average on a 1-hour time frame. The moment we start to break above the 5 SMA on a 1-hour time frame, you got to get out of that short-term trade, right? So again, if the bulls push this up, again, doesn't necessarily mean that this is the low on coin. All it means is potentially we can run into the next supply at $50.75. We've got 51.50, we've got 52.50. So we've got, kind of resistance every dollar higher, So what that means is price action is going to go up and it's going to get choppy, consolidate, and then it's going to hit supply, come back down, right? And then it's going to go up and it's going to hit supply and it's going to come back down. So you kind of have to play these waves. That way you can be able to take those profits. Again, new traders, I emphasize this on new traders because a lot of times new traders, they get into a play, they think that 5 days later they're still going to be holding and the move's just magically going to go in their direction. You have to take profits when you can. Also be realistic. If you've got $1,000 account and you're in this particular play, let's say you've got 1 or 2 options contracts, you're up $100, you're up 120, you're up 150, depending on if you're long or short, if you're trying to bounce or you're trying to play the fade, just take your money. This market, this game, this business, this career path is all about extracting money. Extracting money. We want to make sure that we extract little pieces, little bits and pieces that we can nibble on, right? And then keep the lights on. We want to pay the electricity man to keep our lights on so we can go ahead and continue to trade. We want to just take those little bits and pieces so we can continue to nibble, we can continue to stay full, and we can continue to grow our accounts. It's when you get too fat and too greedy that you think that you're going to make 1,000% on every single trade. It's when you get absolutely slammed. And then guess what happens? The tax man and the electricity man come knocking on your door, right? Theoretically speaking, and they turn the lights off, right? They shut you down. The tax man takes all the money out of your account, theoretically, right? I'm not talking about the actual IRS. I'm just talking in theory, right? So what happens is that you blow these accounts because your expectations are unrealistic, right? Stop being unrealistic when it comes to day trading. Stop being realistic when it comes to a particular ticker symbol. So many people get emotionally involved and married and attached to these ticker symbols in a specific or directional bias. Okay, we have to play the price action that the price action is giving us. That is what it is. We've heard this time and time again. Doesn't mean that you have to be a bull. It doesn't mean that you have to be a bear. You can definitely trade both sides of the market, but what you need to understand is supply and demand. That starts off with the weekly and the daily and the 4-hour supply and demand zones. And then from there, we can now scalp on an intraday basis. I hope this makes sense. If you guys want more information on how I set up my charts, the strategy, my risk, my rules, you guys want access to one-on-one coaching, and you want to get access to trade live with us in the community and get access to everything that's going on the Discord, all those links are down in the description box below. I will see you guys all in the next video.